Hello family, once again, and welcome back to Finance Fridays. I'm your General Manager Walter Lawton here at Nissan South in Morrow, Georgia. And we're going to be talking a little bit about gap insurance and about down payments on vehicles. So when you come into a dealership and say you buy a vehicle that costs about $20,000. Okay, on that $20,000 in the state of Georgia right now, sales tax is about 7%. So 7% of $20,000. It says $1,400. Okay, now you're looking at financing somewhere around $21,400. Okay, is the amount of financing a vehicle for it. Now, with that being said, that's why a lot of times when you come to the dealership, we ask you to put down a down payment or a initial investment. That way, you won't have to finance those sales taxes, and it'll put you in a lot better equity position, and it'll let you be able to trade the car in and pay the car off a lot faster. Okay, so with that being said, say right now you owe $21,400. You put down a nice down payment of about $3,000. Now you're only financing roughly $17,400 on the vehicle. Okay, and that puts you in a good situation for several different reasons. One thing is this: if you go out for some reason and you have an accident and you total out your vehicle, now you're not trying to get your insurance company to pay off $21,400. You're only trying to get your insurance company to pay off $17,400. And hopefully, if you're in a situation, we can even possibly get you a check back. Okay. Now, another thing that's very good, a very important insurance to have is what we call is gap insurance. Okay. I don't have the best handwriting in the world, but with gap insurance. So what gap insurance does is, in the event that you do have an accident and your vehicle is totaled out, gap insurance pays the difference off that your insurance company does not pay. And let me explain that to you as well. I'm going to erase this. So what can happen a lot of times is this: say you buy a brand new car. The price of the car is $20,000. Now, we all know what happens when you buy a brand new car and drive the car off the lot. What? It depreciates, it loses value. So you buy a car for $20,000, and right now when you drive the car off the lot, the value now is, say, roughly $17,000. So you go out here and you have an accident. Your insurance companies will only give you what they call the fair market value for your vehicle, which is roughly $17,000. Now, we did talk about putting some money down, but say in this case right here, you decide you have good credit and you didn't want to put any money down, so you finance the whole $20,000. Okay, but the car is only worth $17,000. That's a difference of what? $3,000. That $3,000 is called the gap. So what gap insurance does, it helps kick in and pay off this $3,000. Okay, so you don't have to worry about trying to figure out how you're going to buy a brand new car or trying to pay the bank back this $3,000 that you don't have on a vehicle that you don't have anymore, and trying to buy a new vehicle. All right, Facebook. So that's going to be our lesson for today. Gap insurance. Gap insurance is a very, very, very powerful tool. They're going to put you in like a lot better position to buy the vehicle when you buy the vehicle, and it's a real worth and good investment. All right, that's gonna be it for today. If you look at the bottom of the screen, please type in your comments. If you have any more questions or you want to learn anything else about gap insurance, extended warranties, or any suggestions that you have whatsoever, please email me, and I'll be more than happy to answer those questions for you. Once again, I'm Walter Lawton, Nissan South Morrow, Georgia. That's www.nissansouthmorrow.com, 770-968-1360. Look forward to seeing you next Friday.